This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, g'day everyone, it's Liam Garman here, Managing Editor of Real Estate here at Momentum Media, the team that brings you the Smart Property Investment Show. And I was thinking to myself over the last few weeks, we always talk about resi, we always talk about commercial property investment. Let's change it up a little bit. Let's trial something new. Let's look at different types of assets in the property world that our listeners should be getting to know more of, that could be broadening their horizons into. And I've reached out to a few people. I've got the expert, the man in the know for agricultural investments. I'm joined by the one and only Andrew Tout, Centuria Capital Group's head of agriculture. Mate, welcome to the podcast.
Thank you for having me, Liam. That's a wonderful introduction.
And look, not to fluff your feathers, but you do know a lot about the industry. You were telling me before the podcast you're a country boy.
Yeah, so I grew up on a family farm out between Narrabri and Moree. So we're sixth generation farmers there. I think we're 160 years from way to go. Unfortunately, it was sold when I was 26. So I had to go on a journey of other agricultural pursuits, which I'm rather grateful for because I've seen a lot of the industry operationally and physically across a lot of different asset sectors, which has been very helpful, particularly helpful when it comes to taking the responsibility for investing other people's money. You really do need to know what you're talking about in agriculture. So
what was the transition from working on a farm into investing other people's money, like you said?
Firstly, I went and worked for a number of large corporate farms in the broadacre sector. Very large remote farm out at Broken Hill, Tando. It was a mixed farm that had brought up sheep, wheat, barley, cotton, stone fruit, table grapes, the Menindee Globe grape. That was the home of Menindee table grapes. And that eventually the isolation got the better of me. 2 years out living on the edge of Lake Menindee was enough. And so I then moved into advisory, worked on various emerging agricultural industries around the Hillston, Griffith area, where I was advising farmers right the way through broadacre agriculture, livestock and horticultural enterprises. So from that, I was then tapped on the shoulder to go into banking and had a career in banking in agriculture, which again gave me a very broad view of many, many different farming and agriculture businesses from a financial viewpoint. So all of those things kind of led to having the perfect range of skills, including becoming a stock and station agent licensed through that period. And those things came together to allow me to enter into the property sector and add some real value to a lot of those agricultural questions that no doubt we'll talk about today.
Absolutely. So give us a little bit of a broad snapshot into what you're doing at the moment. I understand that Centuria, they run a fund which invests in agriculture. Can you give us a little bit of a snapshot and insight into what that looks like?
Yeah, so Centuria have three agricultural funds. The first fund has a very broad range of assets, so table grape, citrus, stone fruit, field tomatoes. We've been looking at all of those different sorts of properties from a risk point of view. We're wanting to get away from taking the agricultural risk, so we've set that up as just OpCo, PropCo. So we're working alongside exceptional farmers where they are the tenant and we're the landlord. And it's not entirely new in Australia, but there's really no other group who has gone exclusively sale and leaseback or structuring new developments for farmers who are exceptional farmers. So our main focus was on, first and foremost, working with farmers who understood the environmental risks in Australia, the farming risks, your ability to manage through different farming cycles. And, one of the key things for that is controlling your environment. First step is water. The other step is your market environment. So we were looking at things that were domestically produced, domestically consumable, so that our tenants weren't exposed to export risk, foreign currency risk, shipping risk, all of those things. That's a cool little fund. It has a bit over 100 million worth of assets in it. We have another fund where the focus was on tree crops. So that fund has an almond property in it. That industry has had a few tough years. It's coming good now, and things are looking up. But the real focus for us has become on focusing on the property side of it and focusing on capital investment into new technology and controlled environment farming. And the top echelon of that is protected cropping, is glasshouses. And so Centuria are now the largest owner of glasshouse assets in Australia. And we have relationships with all of the largest tenants in Australia, such as the Costa Group, Flavorite, Sundrop, Katunga Fresh, Perpetual, et cetera, et cetera. So we've got a very big focus on investing in the absolute most efficient high-tech properties with an even bigger focus on the farmer. You've got to have the right farmer. And so we've got a real strong partnership with our tenants who are the farming custodians of our investments.
So fundamentally, the fund itself is investing in prime agricultural land that is conducive to these agricultural outputs. It ticks the boxes, like you mentioned before, the water, the environmental impacts as well. So ultimately, the benefit for Centuria is the yield from the farmers, your tenants.
Yeah, so there's often confusion when you're talking to a farmer about what years when you talk to an investor.
Of course, yeah. In this context, it's probably a bit of a multifaceted term.
It is, yeah. So you've got, a tomato farmer in the paddock, for example, might be producing 60 tonnes per hectare, using somewhere between 9 and 10 megalitres per hectare. You then go into glasshouse where you've got huge land use efficiency. Your footprint is minuscule. You tenfold the efficiency of land. You're getting 700 tonnes plus per hectare, but you're only using 7-8 litres of water to achieve that. So the yield from a farming point of view in tonnes per hectare is massive compared to paddock production. And the yield also, in terms of return to investors, is a lot higher. So if you go and buy a traditional farming property, broadacre farm, outdoor farm, those properties are currently competed for very heavily by farming families and some offshore institutional investors who are doing a long-term land bank. They are getting returns of 2, 3, 4%. And that's not going to excite our investors. So we're looking at investing in areas where capital is required for these farmers to expand. So there's significant barriers to entry from a capital point of view, but there is also a significant barrier to entry in having a farmer who has the skill and the knowledge to actually build these things and run them properly and efficiently. So it is a yield play, but it's a yield play for two reasons. One being financial yield and the capacity for our tenants to pay yield to our investors year in, year out, but also the yield per hectare and the repeatability of that yield. And so the repeatability of it is really important to consumers and it's really important to supermarkets. So you've got the likes of Coles, Woolworths, et cetera, who want the same product, the same quality on the shelf every day at a reasonably known price. And that's what our tenants are giving. And so that the investment into that sector is underpinned by consumer demand, but also consumer behaviour.
So you mentioned just a little bit earlier in the capital growth for some of these agricultural areas is only 3 to 4%. Is that correct, or did I mishear that?
No, that's correct.
So of course, with your investors, you're convincing them to chalk up a lot of money for what is smaller returns. Hence the reliance on that passive tenant income.
No, the comparison that I was drawing there is that is what you would get if you so chose to go and invest in an outdoor farm.
Oh, okay.
So that's typically the space of farming families who have had those assets for multi-generations. So for them to go and buy an additional 1,000 acres to add to their existing 10,000 acre farm, they can afford to pay a little bit more for it. And the return on that from a cash perspective is not so good. Where we're investing, we're getting returns of 8% and above. So, and that's underpinned by the financial performance of the tenant. And the reason the other properties are limited in availability and yield is that sector is still almost entirely controlled by family farms. And there is also some investment from some of the larger corporate global institutions as well.
Yeah, roger that. We're going to go to a quick break. And when we're back, we're going to be unpacking more in the world of agricultural funds. We'll be back in just a second. Liam, Garman, Andrew Tout on the Smart Property Investment Show, unpacking agricultural land, a little bit different from what we usually talk about here on SPI. Now, Andrew, the skeptic in me would think this could be a little bit risky. We've already identified it, especially with those climate impacts. We know Australia has a tendency to go to drought every few years. How do you manage risk in your funds?
So from an agricultural risk?
Well, as for a return risk, if you have tenants that, well, their yields suddenly start going down overnight, or they have an inability to produce enough output to pay the rent necessarily, how do you manage that risk?
Yeah, so I mean, we like to find assets that are well located geographically for step one. We need to make sure that they've got the right attributes from a climate point of view, the right temperature, day length, as much water as is required, and then some. And we also like to then ensure that those assets have been well built, that the facilities have the potential to produce the yields that are required, and that the operator of those assets has a long history of producing those yields, and that they have been through cycles before where things, as they do, come unexpectedly, and they've been able to make their way through those cycles and lift production back up again. There is also a very long due diligence process that we go through. We don't just evaluate these ourselves. We have other parties that we work alongside who are experts in their field at giving us a third-party opinion. We also look at their full financials. So we do financial due diligence on each of these tenants as if we were going to be their banker. And I've got that background in banking myself, where I know that you need to get 3 years to 5 years worth of financials. You need to ensure that the rent to EBITDA figure is correct and that they can sustain that through various cropping cycles. The bigger impact on farmers is usually caused by variable weather. And that's the thing that these properties are removing. These properties are producing sustainable yields day in, day out, year in, year out. And so those typical risks in farming are actually taken out. And so the other question that we always get with these glass houses is, what if you get a hailstorm? It's probably one of the lowest risks for these glass houses because of the quality of the glass, the structure of the build, the angle of the glass. These things will sustain a very, very large hailstorm before they break even one pane of glass. They're also, for that reason, very insurable. And so our facilities have got 2 years loss of income insurance, full plate glass insurance, and all of those things that you can't get in open field farming are very insurable. So we do the due diligence on the tenant, we do the due diligence on the property, and we've done the due diligence on the industry. So we do have very strong relationships, not just with our tenants, but also with the supermarkets and the other parts of the supply chain that our tenants rely on.
Whereabouts are these farms typically located? Are they right across the country?
Look, every glasshouse operator will tell you that their glasshouse is in the best location, that it has the best access to water or best sunlight or best joules of light, or they're all in different areas. We have one in Port Augusta. We have one at Guyra in northern New England and New South Wales. We have one at Kattunga, so in that Shepparton Fruit Bowl region. We have some in Virginia in South Australia. We have one at Warragul in Victoria. They're all geographically diverse, but that's not a bad thing. That means that at certain times of the year, each of them will be holding an advantage from a price point of view, because that's the point where they have the specific higher yield. The other really big advantage is that field production can't occur in the winter months. So our tenants have the advantage of being able to produce 12 months of the year, and they're producing for a domestic market that love their product.
Yeah, that's a perfect example of that diversification. How do you go about finding investors for the fund?
We have a very strong partnership with investors that have had a very long association with Centuria. And so we've been blessed that the investors that we have know Centuria, know us for many different asset classes, and know that we, are very careful about how we invest their funds. We have also a number of other partnerships where we have interest in the fund, and those groups, they're raising capital as quickly as we can place it. So the interest in the fund has been amazing. We are paying 6 cents per unit to investors, and that's something that we're very proud of. We started, I think, at 5.25 2 years ago, a bit over 2 years ago, and we've managed to increase the distributions to our investors throughout that period. And that's simply been because this industry is CPI linked. I mean, it is the food bowl. And so our tenants have been able to ride through this high interest period without any issues whatsoever because the value of their produce has gone up relatively. So it's been a really good example or test on the resilience of this sector.
Very interesting point. I do apologize because I don't necessarily have a great understanding of the finance behind this. 6 cents per unit. Can you define that for me?
So that if a investor puts $1 into the fund, they get 6 cents back per unit of investment. So at the moment, the valuations for the fund have remained very strong and stable, and that's expected to continue as it goes forward.
No, that's fantastic. And also a remarkably interesting point about the ability to ride through the cost of living pain that a lot of people are experiencing at the moment, which, especially compared to what we're seeing in the commercial and residential property markets at the moment, we've seen the Melbourne market go backwards. We've seen, even over the last 3 months, Sydney's residential property market's kind of flatlined a little bit, which obviously can be pushed to inflation, interest rates, which are stopping any further growth. So it is interesting to hear that this is hedged against that. We're going to go to a quick break, and when we're back, we're going to keep unpacking the world of agricultural fund investments. We'll be back in just a second. Liam Garman, Andrew Tout on the Smart Property Investment Show. Andrew, just before the break, we were unpacking the return that your investors get from these funds. Do you expect that these will continue for years to come? Do we expect that these returns will either continue to remain at that 6% or potentially grow?
The agricultural sector has been very consistent. So over the 100-year period that's been measured, it's been a reasonably stable 5% increase in value per year. That's been underpinned by CPI and also productivity growth within the sector. So the linkage to CPI has been very strong, but also as yields increase, as technology improves the way farmers farm, we have great confidence that the industry and the sector will continue with that stability. Other things that are happening globally are having a massive impact on that as well. So we're looking outside our borders, and Australia is a net exporter. Over 70% of our produce goes overseas. We aren't focused on the export sector, but we are underpinned by that export sector. So that middle class in Asia is set to double by 2030. And what that's doing is underpinning the values of farmland in Australia. And that, by default, is meaning that people are increasing their competition for that farmland for other uses, for permanent crops, for tree crops, for higher and better uses than producing field tomatoes. And so that again is insulating our producers and our growing systems to mean that this controlled environment farming system is becoming more and more popular because it is more and more sustainable from a financial point of view. We are very proud of the fund that we've built, and as part of my involvement in the industry, I'm also the chairman of Protected Cropping Australia, and that's something that we're as an organisation working side by side with our investors, our tenants, and the government to ensure that this industry becomes all that it can be.
Do you get time on tools much anymore as a country boy?
Not as much as I would like. No.
Do you long for it?
I absolutely long for it. I have and always will have a passion for farming and for working in the paddock. But I also really enjoy working with these farmers who are the absolute top of their game, and just watching the way they innovate and adopt the different things that are happening in the market is great. So I'm as a farmer or farmer's son, an ex-farmer, it's a real privilege to work with the sort of tenants that we've got because this is absolute leading edge technology, and to have that exposure, I'd almost give up working in the paddock for it.
Well, it is exciting, and as you pointed out with the 3 different funds that you're running at the moment, you do actually get that insight into different parts of farming as well, and all the innovation that's coming out of it from the tenants. Now, Andrew, for our listeners who might be very active in the residential commercial investment space for property, but are listening to this podcast and thinking, well, I might look to diversify. I would like to diversify, especially given perhaps some unpredictability in the capital city markets that we're seeing in Australia. And they're listening to this, well, agriculture seems to be a very safe asset class to move into, given projected demand growth from Asia with the growing middle class and population growth. How can they start the agricultural investment journey?
I think it's a pretty simple act of picking up the phone. We're always happy to talk to people. There's details on our website of how people can get in contact with us, but our tenants are really, passionate about what they do, and we love taking potential investors for site visits to go and see the amazing thing that is a tomato glasshouse. It blows people's minds when they see just how high-tech farmers are. It's not the typical view of farmers. These guys are super smart. There is a huge amount of technology, and the efficiencies in production are amazing. So it's as simple as picking up the phone or sending an email, and we would love the opportunity to take people out there to see what we're doing.
Any plans for future growth on the horizon for your team at Centuria?
Look, we're growing at a rate that we're very comfortable with. The intention for the fund that we're currently building out, it's sitting just over 450 million at the moment, heading towards 500. We can see that fund getting to 2 billion without too much trouble, but you have to grow at a pace that the market can sustain. And so that's one thing that we're very conscious of, is working very closely with our tenants and the supply chain to make sure that all of those things match.
And it does seem like a very interesting world that you're in. I can imagine bringing the investors down to the site visits. There'd be some freshly bought Akubras and freshly unfolded high-vis shirts. When you have a politician that goes to a site visit and they're wearing like a high-vis shirt and it's only recently unfolded from the packet. You can still see the creases and the brand new boots that they're wearing that have never been worn before. I can imagine there'd be a few of those.
Look, it's not a good look. Well, you can see it from a mile off when it turns up with an Akubra on. But our investors, you sit down and you have a chat to them. They've got an uncle, a cousin, a brother, someone who's involved in agriculture, and everyone has to eat. So I think that's the bottom line, is that when you consider that agriculture is what feeds us, it's what clothes us, everyone's involved in it already.
Yeah, absolutely. Mate, thank you so much for your time today. It was greatly appreciated.
No trouble at all, Liam. I really enjoyed the chat.
And if you do want to hear more about the agricultural investment and working with these teams that are coming up with some really innovative solutions for agriculture in Australia, please do reach out to Andrew Tout. Reach out to maybe you're on LinkedIn.
I'm on LinkedIn. We've also got a lot of information about agricultural investments on the Centuria website, which is centuria.com.au. And so there's also a lot of videos and information on there that people can go to for a quick look.
Yeah, fantastic world. So do look into that. But that is all we have time for today on the Smart Property Investment Podcast. And we'll be back very shortly with another episode. But until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.